Hey traders, welcome to Charts and Coffee. Hope everyone is having a great morning. Happy Thursday, everybody. We are going to kick it off with a look at the PPI reaction. So that about 4-inch tall, 2.5-inch tall green candle on your charts, that is the PPI. This is a hot zone that would fall in the category of inflation. Look, we've had a lot of confusion the last 2 weeks. I would say this started last week. It really affected all of last week's trading and follow through. Thursday was sort of the summation of what happens when retail panic meets the algorithms, meets FOMC members, meets AI interpreting what that means. And you get this collision of so many forces that turn into a Thursday candle that really do reflect a lot of the frustration, a lot of the confusion that's being exhibited by the markets we are trading at the moment. And what is that? When are you going to cut? That is what the market wants to know. Jerome, when are you going to get to it? And until that clarity is either driven home by data, where we see a distinct move with PPI or CPI, both of which we had this week, CPI yesterday, PPI, well, just now, until data forces the hand and gives us clarity. In other words, the jobs number is X or the inflation metrics are this, and that's going to therefore increase the likelihood, that kind of logic. Or the Federal Reserve is a little bit more overt about their messaging. Till that happens, it's going to be really difficult to get follow through. But this doesn't mean we can't trade this environment. It's actually pretty darn tradable. Right now in the Sector Secrets Mastery, we have an open position in the SPY. We have an open position in BITO as well, and Freeport McMoran. And we did get, unfortunately, because it is a pretty darn good move that's happened, but I did end up taking a paper cut on XLB. But for a week, I'll take 3 out of 4, right? 1 out of 3 at bats land you in Cooperstown. 3 out of 4, they're building a whole new wing for you. I'll take it. So that's where we are right now this week using the top tier. What is happening with top tier? There are still places, despite the Thursday sell-off, that top tier says, hey, Rod, there is still a trend. Freeport McMoran is one of them. Energy is another. That's another sector we're definitely going to continue to focus on. But then we know there are places like the S&P that it's gotten a little bumpy. We adjust, right? We adjust. So these are things that we're going to continue to monitor, to focus, to capitalize on. And it's actually turning out to be a pretty good week for the second week of April. So I'll take it. As always, gang, if you have any symbols you're taking a look at, if you have any questions, feel free to type them in. That's where we sit in terms of the aftermath of ES. Let's go ahead and take a look at those short-term time frames just a bit. All right, so I'm going to move this daily over, and we'll take a look at the 5-minute. All right, so what happened on the 5-minute? Now, remember, we have the hot zones this week. Now, actually, there's a couple different hot zones we have going on throughout the week and landing on price action today. Let me show you here. Okay, so it's Thursday. Scroll on down. We still have natty gas storage to come. We still have the 30-year bond auction to come. But if you take a look, we've already got through the European Central Bank. We've already got through PPI, unemployment claims, and the 845 presser with Lagarde and Williams and Barkin. So, I mean, I'm not just giving credit to PPI, but obviously there were a lot of things that came into focus there. So ultimately, what we want to remember is this is the summary of a lot of things going on. We have one more hot zone to remember for the afternoon, Bostic. But hey, upward and onward, and that's really at this moment all that matters to me. And if we can maintain this into 9:30, that's going to be the key. We don't have a 5-minute trend. We are trading above the previous session close, and the ES, the previous session close, was 52.03 3/4. So there is our PSC. We are above it. That would generally be, interpreted as being in the bullish side of sentiment to kick off the morning. NASDAQ previous session close was 18,192 1/4. So I'm going to update that as well. 18,192 1/4. So again, above that. Now, what about the Dow? Dow is the ugliest of the indices, gang. Dow is the ugliest because take a look at the top tier candles on the Dow over the last handful of days. Unlike the NASDAQ and unlike the S&P, the Dow has plotted some red candles. Remember, when you're looking at top tier tools, we're not looking at a simple moving average. We're not even looking at an exponential moving average. We're looking at the ability to see price and participation, and not in a sequential manner. When you have something like the way in which volume moves in and out of the market, the way participation moves in and out of the market, the way volatility, take a look at Thursdau, the way volatility is moving in and out of the market. We need to look at multiple factors. And that's exactly what we're doing here. We had that crazy beyond 68% probability day on Thursday, but the Dow is still struggling. So this is not somewhere that I'll say no to, but it's not a yes either in terms of the top of the list. There are better places to focus within the Dow than the Dow. We'll talk about that in a moment. Previous session close, by the way, was 38,726. All right. There we go, 38,726. And yes, we're above it, but let's also remember that Dow has XLI within it, which looks a whole lot better than it, right? Take a look at the XLI. Let's open this daily chart up so everyone can appreciate the hard work that XLI has been putting in. Consistent green grab candles, not even a neutral. I should say these are the top tier candles. That's just 30 years of habit of grab. These are the top tier candles. Green top tier, not even a yellow wobble. Why? Because the XLI is not getting fooled by the current wobble that's happening in, say, the Dow. XLI is still quite strong. XLE is still very strong. So this is where index sector stock alignment and relative performance come to a head. There are pieces of the Dow that are spectacular. I'd even say the XLF is, except we're motoring into earnings season. XLF is doing pretty darn well. But again, earnings is going to add a lot of volatility that, frankly, we don't need, but we got to deal with anyways. But there are corners, meaning sectors, right? Corners of the market, sectors within the broader averages that are outperforming. All right, so that is what we've got here so far. All right, so let's jump into some questions here. Good morning, good morning. How about Nike? Sam, how does Nike look? I don't know about out to June. I don't do those kind of cutoffs, Sam. I just look at what's happening right now in terms of structure. As far as predicting what's going to happen, that's not ever been something that I'm going to expect myself to do. What I will say, to your point, Nike is a bearish environment. And one of the things we talked about yesterday in top tier, and I don't know how many of you had a chance to check out the top tier pro system. It is going to be, the class is, here we go. Actually, I'm going to go ahead and put top tier pro class on Saturday, this Saturday, gang. Top tier pro class is this Saturday. So if you head on over to toptierproclass.com, a lot of folks during the webinar yesterday said, Rog, what about downtrends? You've talked about bullish markets. We know you've been growing the account on the uptrends, but what about downtrends? Nike's a great example of that, Sam. Nike's a downtrend. Take a look at the weakness in Boeing. Take a look at the weakness in Apple. Also, those of you that have watched the last couple of webinars, even before the class, you're probably saying to yourself, Rog, these are in the bearish hemisphere. If you watch the webinar, you know what that means. These are red candles. The top tier is saying things are weak. So that would be something, Sam, for sure, that I would put on the week. Let's look for long puts list. And it doesn't matter if it's long puts or long calls. If we just follow what the top tier is saying, we know which side of the hemisphere it's on, bullish versus bearish. We know what the setup would be, just like there's green meets the gray, there's red meets the gold, and we just follow the process, but bearishly. And then as far as, what the timeline is, I usually don't concern myself with having to not only figure out what symbol to trade, where to trade it, but then what the timeline is going to be. What I'll focus on is if there's a trend on that time frame, give yourself more time, right? Give yourself more time for follow through. Like we did, for example, in gold, like we did, for example, in Freeport-McMoRan. When we bought these at the end of March, we bought the April 19 expiration so we could take advantage of this for as long as possible. And if I wanted to go out even further, if there's liquidity out in the third Friday of May, that could have been a viable alternative too. So Sam, look for the liquidity. That'll probably be the determining factor. Chaos BITO, we're probably going to hit, actually, we're going to exceed our first target this morning in BITO, okay? So we'll be scaling out of that. Those of you in the Sector Secrets Mastery, bot will send that reminder out. I think she's got that keyed up. I believe we're sitting, beyond the first target in BITO this morning. All right. Sergio asks, have I updated the multi-trend indicator? Updated? No, we have a brand new indicator. It with new data or just change the name. Sergio, seriously? You think I just changed the name? For 14 months, we went back to the laboratory. We went back and we rebuilt this. I would never do that to folks. Did I change the name? No, my friend. What we did is we actually asked ourselves, what are the things that are making traders do what they're doing? Hedge funds, right? And if you've been in Charts and Coffee, Sergio, maybe you've been gone for a little while. In case you missed all that, we went back and said, hey, what are hedge funds doing? What's that size doing? What are algos doing? I talked about two of the more popular algos in yesterday's webinar. And then we talked about 0 days to options expiration. We talked about the retail trader growth, influence. Retail traders are a force, but the way everything's happening in the market, we have to measure things differently. It's completely rebuilt. All right. But yes, it will look different now. Absolutely. The candles will look different now, Sergio. The wave will look different now. To your point, I wanted there to be some familiarity, right? Because the philosophy for what these tools do is the same philosophy I've embraced for 30 years. But the way in which I have to come upon the answer, the formula had to be different. The question had to be different, right? So it should look very familiar, but you're going to notice it looks very different in terms of where those levels are plotted. And then you add the daily price movement range to the mix, and that is the top tier pro system. All right. Okay. Next up is, do I send an email when the daily price movement ranges are updated? Eva, I don't, but the office does, right? We have our great staff back in Austin, our team back at Austin HQ, Texas HQ. And when we do have the updates, I mean, you're going to hear it in the room. We're going to talk about the updates. Lorna Bot's going to talk about it in the tech sessions that happen every Monday. And yes, there's always an email that goes out, so you know to log in to the Simpler Trading website, get those updates. The next update is going to be a big one because we're definitely shifting to some of the XLI, XLE. There's a lot of new names on the DPMR. I'm very excited about that. And once you get the email, or you hear it from me or Lorna Bot in the Sector Secrets Mastery, you can head on over to the My Indicators part of the Simpler Trading website and download your indicators. All right. Next up is great webinar. Any thoughts on Diz? Yeah, I want to buy it. Thank you, Cash. I want to buy it. I definitely like the structure. So this brings up a really great question. Rag, what about markets that aren't in uptrends? What do we do in chop? What do we do in downtrends? We rely on the same tools. So, when I'm diving, I don't change my fins out or my mask out, or I don't use a different dive computer. I'm not using a different gauge. It's the same stuff. We have to simply learn how to interpret it. I guess there's a lot of analogies for that, right? The bottom line is the tools should be able to, whatever tools you're using, maybe you are using top tier, maybe you aren't, but whatever tools you're using should be able to interpret what's happening on the price chart, what's happening even below the surface of the price chart, time, volume, volatility, and say, hey, this is the environment. It's like having a really good caddy, right? You're on the course. The caddy will say, you know what? This is where this club and this shot might work best. That's kind of the way I look at it. We're professional golfers. That's kind of cool. Who would want to be a professional golfer? And then now I've got this caddy saying, hey, I think this is the shot. This is what the wind's doing. This is what the lie of the ball is saying. And if I don't have that good caddy, I may not make a great shot. Well, in this case, I rely on my indicators to say, hey, this is still a really great uptrend. Look at the consistency of the top tier candles. We're still above the equator. We're still sometimes flirting with a mean reversion, which is actually really powerful. And even though we might have a little bit more neutralness working into the market right now, right? What direction have we been moving on? All right. What direction have we been moving in? Those of you, the Simpler Central room, we sent out 3 trades just the other day using this indicator, right? Some of you are still in XLB. I actually had a couple of you saying, Rag, I'm used to risking max debit. I don't think anyone should be in there. Here I am telling people to take a small loss. Why? Because we're going to have a big win in BITO and likely in Freeport McMoran coming up. So, if you're saying, okay, Rod, but what's happening in this environment? 3 trades the other day, 2 out of 3 of them are going to pay. One of them had a paper cut. Less than 3/4 of a point risk to the account is what we're usually looking for. So yeah, I'm going to do the same thing on DIS. I'm going to do the same thing here on DIS. And ultimately what we have here is potentially a mean reversion, cash. That's that upgraded wave. And then the daily price movement range is in the mix as well. We'll get today's daily price movement range at the bell, right? So the bell rings, daily price movement range instantly plots the gold and the gray, and then we get to work. So do I want to buy it? Oh, yeah. Now, what about Occidental? Occidental, 5-minute chart guy. Are you asking about the 5-minute or just in general? Okay, so if you're looking at the daily time frame of Occidental, love this one. Great eye, because what we have on Occidental is an uptrend in the XLE. Occidental also allows us to take advantage of some of the strength that's in XOP. So there's a lot going on to make us really love Occidental. It's got good liquidity in the option chain, so we love that as well. What's good liquidity, gang? Never go into options with low open interest. The spreads are often wide. And remember, it's not just about getting in, it's also about getting out. And if that open interest is low, that could be a real problem. Keep an eye on that. A lot of people wander into illiquid strikes, illiquid options, and that increases risk. It's a very stealthy risk. So Occidental is one of those names that absolutely is one on the list, daily price movement range, because we're so far away from the mean reversion, but we're in that bullish hemisphere, bullish multi-structure, bullish top tier candles. Yeah, love it. Absolutely. NUGT. Yeah, I would say, Ben, we're in the GLD, but NUGT, GDX, yeah, all of these are definitely on the radar. I don't typically play NUGT, but look, it's 6 of one, half dozen the other. Once we've got the clarity in the commodity as we do, we're looking at a 5X. I don't know, this morning, did we gap up again on gold? We might be closing in on 6X on our GLD options. Oh yeah, no, it's holding steady. So we're right now looking at GLD that we got for what, 355 for the 200s. Yeah, we're in April 19 200 calls. These are definitely opportunities I would like again. So when GLD, Ben, is tracking higher, that's when I'll look at things like GDX, GDXJ, NUGT. The miners are fine. But what I will say is the same thing I would say for oil. If I'm looking at playing oil services, energy, oil and gas explorers, I need some clarity in the commodity, right? The top of the food chain is, say, crude oil, even natty to a certain degree. When that is moving higher, those stocks are going to benefit. So same thing that goes with gold. When gold's giving us that clarity, and preferably tracking with real yields or real interest rates, then we're going to see clarity on GDX, GDXJ, and UGT, those gold miners. So there's a lot to like there because that commodity is the reason for that move. And I would even say, hey, Ben, take a look at the XME as well. Since you're definitely looking out of the box, which I love, take a look, gang, at the XME as well. All right. Okay, gang. So in terms of what we've got going on here, please remember we still have some hot zones still to come this morning. We've got the class coming up on Saturday. If you haven't checked out what we're doing with that class, what we're doing with the indicators, look, I've been trying to get these ideas out to everyone. We've been testing this for 14 months. The analysis that I've been giving you, where to be long, why to be long, is coming right from these indicators. If you've been hearing charts and coffee, you know that we've been really doing well this part of the year. We continue to, again, have some winners despite the chop we saw that started last Thursday. I want you all to get your hands on this because it is going to help. There's not much that I can say. I can't guarantee results. That would just simply be immoral. But what I can tell you is you will get clarity, right? You will get clarity. And with clarity comes confidence. With confidence comes account growth. And that's what we're here for, the consistency in the account growth. And, of course, the coffee. I'll see y'all tomorrow. Be good to each other, gang.